This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Rutherford, Chief Strategic Officer of T3Live.com. Welcome to today's morning call. It is Thursday, and what a week. I feel like last Thursday, only 5 sessions ago, you had the big break in the S&P 500 or the SPX when we confirmed the move below 2040. And then from there, boom, downside follow through on Friday, the mini crash on Monday that became a very tradable buying opportunity, and here we are today. So let's just talk about the action for right now. The action overseas, finally a little bit of a tailwind. They've been giving us a headwind for almost a month or so, maybe even more. So you had the Chinese markets, which you'll hear about. The Shanghai had its first bounce back day of 5%. So if you did put on some exposure, if you watched the VTF or myself on Twitter or even the recap, I talked about putting a little bit on for the first time in multiple weeks. What I bought is the ASHR. What you want to do is you want to pretty much map out where these things could bounce to if you're just trading it for a tradable bounce or you want to do it for more. So anyway, you look at the chart of the ASHR. I talk about trends all the time, and people are always like, how did that whole big correction happen? How could you have got out of the way? Anyway, this is when the ASHR broke out. Okay, this was your tight range back in March. And then what happened? It was above the 8-day moving average for the majority of this move. So if anyone was trying to short this move, chances are they didn't stay the course, because how could you? It was that hard. Okay, then you broke the 8 and 21 day, came up, retested, held, and then gave you the second tier move. So when this trend broke here, okay, that was pretty much your spot to get out, because once you had to move down, the retest, it then obviously just stayed below the moving averages and never gave you even any type of buyable bounce or anything substantial. But anyway, that was the trend for that quarter. And then below this, you get out of the way, not knowing that's going to happen, but you never know what's going to happen. But if you reduce risk when trends change, and I do follow the 8 and the 21 day for those active trends, it didn't matter. So anyway, fast forward to where we are here. We got a small double bottom. It is up a little bit today. You make it take a closer look. I would probably trim a little bit on the up open. Why not? It's up 4%. But then, if it gets above this spot and the markets want to bounce a little bit more, I would think that this 34 would be, an area. And if it wants to, continue for a little while, then you have another resistance here. So I would say resistance 1 if you really, that short term. You take some off into this up move right around 31.66, which it is this morning, which is about almost 4%, and then let some of this gap get filled. Remember, from 55 down to here, if you did buy yesterday with me, you got a great print. If you look at the FXI, some people went with that, very similar. This also, had a big time move that, trends broke right there. And if you did buy some, yesterday with the small higher low here, okay, you have some room to where it broke down from, which remember we were talking about that lower low. Well, that was around 38.88. So perhaps, you see some type of bounce up to, the 38 area in the FXI if you're trading it for that. But again, very broken, lots of overhead resistance. Bounces do happen in broken markets for now. So, take trades until, there's a little bit more clearer picture whether the trend changed. In Europe, the DAX is up about 2.5%. 2 days ago it was up 5%. Yesterday held in pretty well, only down 1.5%, so it's getting some follow through. That's 8% off the lows. If you played that bounce, you look at the HEDJ, you want to see potentially where this could go back up to. And just another, little educational tool. Look at the move that Europe had in the first quarter. What was this indice? Okay, it was above the 8-day and 21-day moving average for the majority of that trend. That means you do not short that. You try and buy that. Then remember you had this little head and shoulders pattern, okay, where it broke trend, made a lower high, created this pattern. That's what started the corrective phase. And then PS went all the way down to here. And now if you are in the HEDJ, I would say, maybe there's room to retest, this spot. So if you bought yesterday with Europe being up, you sell a little bit, and then you see if it gets rejected or not around this 59.31, and then a lot bigger, resistance a little bit higher, which sometimes, you get that overthrow. So today our futures are up 18 to 19 handles, which is great to see considering we had a strong close yesterday. Traders like follow through, meaning if we close weak, hopefully the next day you close down, because if you close weak, you look for downside follow through. If you close strong, you look for some upside follow through, especially after the volatility that we've seen. So if you go to the SPX, you will see that, first of all, again, how many times in this morning call did we talk about this range, this monotonous range that, we wanted some type of resolution, and when it resolved, you had to jump on the direction, and PS, this range within the range, I don't remember how many times, we went over this every single day because that's what was going on at the time, finally resolved lower. So you could have been in risk, you're in, in the markets, and on this day, got out of the way, and if you were waiting to finally short a break, well, here it was. Okay, there was your break right there when it went below 2,065, lost a 200-day with authority, and closed below the bottom end of the range, engulfing this channel. So if you got out of dodge there, where you saw, on my VTF, I was pretty much flat last week, Thursday and Friday, or got short, which I didn't do, but if you did great, that was a nice move. And then you had boom, boom. So anyway, let's go to the spiders real quickly because I feel like people, are trading that. So, and the points of reference are a little easier to see. First of all, you take a bigger look at the spiders and you'll see that, this trend broke right around here. Okay, and sometimes these trends get retested. So what do you have? You have big support going sideways. Okay, the reason why we mapped this out on Monday was because of these prior lows. I actually didn't think it was going to get there so quick, but you know what? You never know the speed, and this is 182 going sideways. So all in all, you take a big look at it, and this trend broke. Okay, you can actually even draw it a little bit further out here, and moves happen fast when trends break. That's why you always want to be prepared. What did it come down to? Came down to support going sideways, points of reference. So, this size break, you do get some kind of bounce. And we were minus 90 on the oscillator Monday. Now today we'll probably be close to zero. So the question is, does it retest this area, or does it, retest a little bit lower? So we'll see that, so that's what I'm going to be mapping out today. I do come in long the spiders today, and I was thinking perhaps, it takes out this pivot and fills the gap. If we opened up a little bit lower today, it probably would have been even a more profitable trade if it traded through it versus opening up and filling it, pre-market, because I think most guys long will probably sell it, into it. This is 197.50. So here is your gap fill. Okay, you were long yesterday and you want to take some off into there, can do, I would say, a good job. If you're looking to just short right here, just realize, it could go up a little bit more. Okay, this is like the 198 and change. And then if it really wanted to, at some point, I don't think it's this week, but you do retest broken trend lines, and that comes a little bit higher, a little bit closer to 202, 203 to 204. So, this spot is a nice, was a nice tradable spot to work off the oversold condition. Now the question is, does it push the envelope a little bit into the weekend or not? Most of the sectors all look like this. Talked about, the Monday high, Tuesday high pivot. Can we hold below it and trade through it and get a little bit of a cash flow type of bounce? If you were out of the way last week, you're allowed to buy the dip and you're allowed to trade the ranges. We talked about the new range. So the Qs showed some relative strength yesterday, didn't it? Right? You saw the spiders did not trade above that 2-day high, so the Qs did, giving you a little relative strength. Okay, now it's probably opening up, right into, I think it's close to this 10, what's this moving average? 104. It's above this. But below that. So here is that gap fill, that breakaway gap, and that gets filled to 107. So the retest of the Q's broken trend line, if you just draw it roughly from way back here, okay, comes in pretty close to this 107. So it's not quite there yet. Sometimes it doesn't make it there, sometimes it pushes above it, sometimes, who knows. So what I'm looking at right now for the Qs is to see, what does the leadership group do? Can it, take back certain areas? So a close strong, if you went long, some things on a strong close based on it closing above this pivot, you're getting paid this morning. Okay, you have some resistance between this 104, 105, and then obviously big resistance comes in, near this breakaway gap, which is like, 106.50 to 107.50. So that's what I would be looking at there. The bios, are kind of in line. We talked about, this trend break also. I'm just going to draw it from here. You had your trend break. You had your, head and shoulders pattern where guys who are looking for that measured move of this pattern with the break of 360. You got more than paid. Lately, it actually look at this. It reclaimed the 200-day, which is pretty impressive. One of the few sectors that did. Here's that pivot. And today it's probably opening up here. Do you buy, the IBB on this open? I think the first move would be to wait maybe and short a little bit around 350, and then, or wait and look for perfect prices somewhere around this 359. I would think, into this zone would be a better sell the first time than a buy. And if you, went long yesterday just because you were looking for some bio exposure, I would trim into this up open and then figure out what's next. Overall, at least we have technical patterns here to trade. The IWMs were a little weaker, and they showed us their weakness well before the market broke too, going below the 200-day. And this too, just so you can look back as patterns repeat themselves. This breakout failure shouldn't have happened. Then it came in lower high, and then here's where it broke the 200-day, broke key support, and then boom, boom, boom. Okay, so now if you look at the Russell, it lagged yesterday, obviously. You saw the bios above, okay, the 3-day pivot. You saw the Qs above the 3-day pivot. And this is still well below the 200-day, well below everything. So we'll see. If the rally gets a little bit broader, maybe, this plays a little bit of catch-up. But, it hasn't been the place to be. You'll look at it today, I guess, to see what's next. 116, and then, here's a much bigger resistance around there. So, here's that pivot. So, when you don't have stocks breaking out to new highs and you don't have the H cell set up or this or that, you look for pivots where there's going to be a fight between the bulls and the bears, because there are definitely people short and there are people that are looking for a bounce. So if you win that pivot, the move happens fast and you get paid as a trader if you isolate that. So during this corrective phase, I've talked about going after the leaders of each sectors, or at least the go-to names that I isolate in my note every single day if you're a member of Red Roll Access. And those names are the thickest and they're the ones that move the fastest. And if you sold them last week, or reduced your risk when they broke all their upper active momentum levels, you weren't caught and they created really nice tradable spots this week. And if you followed me on the VTF, we've been trying to navigate them all, or a lot of them. First one to look at is Apple. Apple, obviously has not been a strong stock this year. It's been a strong stock for the last decade, but just not for this year. It was stuck in this channel. And what did it do after it gapped down on earnings and didn't fill that gap? It broke this bear flag, and then it's been a down move with trades along the way ever since. Okay, you remember right here, you had a little red dog reversal, then retested the 200-day and failed. Here, another reversal point, lower high and failed. And then on Monday, that's where I made the majority of my money, buying the dip in Apple. And basically since then, it's held up pretty well. Here's another little pivot. So it's opening above this. Some people are already saying they want to short Apple here around 112. If they want to be cute, it could push up a little bit further up to 114. So I think based on, Apple, you could see what type of rally we have today on whether we're only up like 150 or 200 or go more or fade a little bit. This is prior support, this 112 going sideways, that's where it is. If you were long on this candlestick yesterday, I would trim some into 112. And then see if you get some kind of divergence between 112 and this 114-ish. If you are looking to see if this 21-day moving average, which has been resistance, poses as resistance again. So it could be a better short or a cute short into there versus, buying after missing this whole buyable dip. And then you have the other, go-to names that are on the list. Two names that that crossed the pivot before the rest of the market were Google and Amazon. Google, was upgraded by Goldman yesterday, and I said, let's see if some stock could clear that 2-day pivot to show that it's more than a feeble bounce in the overall market and that we could have some power. Well, Google did it, and now it's opening up. I would say if you were long Google from the whole or from yesterday, I would definitely be looking to sell some into here. And if you're looking to fade a move for like a green to red, which isn't a bad thing to do today, maybe close to this 675 would be a good spot to test some shorts or look for a divergence for versus the high. And if you happen to be long, I think selling into this first time it's here versus initiating is better. I think the same thing for Amazon. Amazon, cleared that 2-day pivot, giving some signs of power. So if you took this home long because you wanted more momentum, congratulations. It's going to be testing a level that it broke down from already. So this too, just kind of like like Google, if you were long yesterday, I'd rather see you sell some into this 515 to 520 area versus adding. And if you want to try and find a cute short, this 513 to 515 could be a spot to re-short a test. But usually the first stocks that get there are the strongest ones. So you're shorting the strongest ones versus the laggards. So you got to be a little careful. But this is, I just think, these tradable ranges for now until real patterns build again. Another stock that is similar to this one that crossed above the pivot was Netflix. Netflix, gave you that way out here. Remember when we said if it breaks this, 120, get out of Dodge, break the 8 and 21 day. You don't have to be in this, and the momentum can change. Well, it happened there. Okay, and it also you had a little clue right here. This red dog reversal right there. Boom. I remember thinking maybe it could rally, and it failed there, and pretty much wasn't long since. But anyway, it broke down, and now this has a little pivot, just like everything else. A little pivot right here, support. It broke above, and now it's opening higher. So, into the 21 day, it'll be interesting, which is around 112. So if you are long it, I'd rather see you trim a little bit here versus adding here, and then perhaps those who are looking to short a move, the first time it gets there, this is a little bit closer to 116. So Netflix could move fast. If you short 112, you might not hold to 115, 116. If you're waiting for the perfect price, it might only get to 112. So you got to figure it out in there. But either way, nice buy in the hole, nice buy yesterday. If you did, and into this spot, you trim because there could be some green to red trades today if you see the divergence based on the size of the move from Monday's low and even yesterday's low. So you want to trade those ranges and make sure you don't ruin a good trade. Other names that we've been looking at, Facebook, up this morning, Gene Munster said he still loves it. What could you have done here to avoid the pain? Once it broke this high level flag there, that was your out. If you got out there when it broke the 8 and 21 day, which is one of my momentum rules, you weren't in for this mayhem, and here's your lower pivot. I'm actually long this one overnight, and it's clearing this 87.75 pre-market, and I think that there is a gap to be filled here into the 90.50. So if you're long it, maybe trim a little bit up $1.50 and then hold some to see if it fills this gap, and then into the gap fill. I would take the trade off and then revisit because, again, huge travel range, and these things are going to need time. So until they do, play the ranges, play the patterns, and keep making money. As far as the other social media names, I'm not even going to get into them. Other names that guys wanted to look at during this week, where there was liquidity and, some leadership. You look at GILD. GILD for itself had the same type of thing as a lot of the bios, and if you look, all these patterns look very similar. So you don't need to be in 12 of them. You look at 3 or 4. And this one too had your big move lower. Here's when it broke. This could have got you right out of the trade, this little triangle in the middle, and boom. And then you didn't have to be in that craziness. So into this, some support. You could be long it, from yesterday. If so, if it takes out this 107, maybe this has a gap fill. So you see a lot of these patterns found some support. They have a little pivot. They get above. You get some room. Take your trade off, maybe look for a cute short. That's basically the concept here. Disney also is something good to watch. It tried to lead on Monday, Tuesday. Some of us were trading it. I do not have this one right now, but it does seem as if it could give you a trade above here. back to perhaps retest this broken area. So there's a little room here if Disney wants to rally. It's good to see what the market's doing with Disney because people have been watching it ever since this hard break there. As far as the banks, they've lagged a lot, and at this point, you do have a lower pivot here, which obviously you see them not leading. You know, you saw Netflix break above this pivot. Google broke above its pivot. Tech, the banks, you know, with the perception that rates are going to be pushed, that, you know, liftoff is not going to be September, may not even be this year, you know, got a little lethargic, so to speak. This has been in a downtrend anyway for a while, and ever since this little red dog reversal there, I don't think many of us have been trying to buy any of the banks, and then especially when it broke the 200 day. So anyway, if this can clear this little spot here, which is like, what is this? What is this high here? This high here is 185-ish. Perhaps, you know, you get a trade to here, and then if the banks really want to, you know, have a little bit of power or want to continue, there's that gap up to 195. Which the 21 day has been resistance and been in control of every bounce since, even with the 8 days. So the 8 days is really 189. So you have about $5 of room here if it wants it, and that would be an easy bounce or an easier bounce. As far as, you know, since we're talking about the banks, let's talk about the TLTs. They gave you a clue that the low is in on Monday in equities when it had its massive reversal, and they'll also give you a clue to get short or get out. You know, what does a reversal look like? Okay, as you're trending up, and if you're in, you know, the trade from when it broke here, you know, you want to measure and you want to have pivot. So this was your pivot high. What did it do on this day? Broke above and then closed below. That's an outside move. That's your sell signal, especially after a big move like that. So anyway, 3 days later, you're on the 200 day. So I think they're up a little bit this morning. You know, some people might have covered onto this because look at this, from 128 down to 121, 7 points. So at this point, maybe see if it could hold it or buy a little bit versus for some type of bounce, but then resistance will be, you know, a little bit closer to 123 to 124. So, you know, you had your tradable move into an outside day, get out of Dodge, and then figure out what's next. And that's really it. So in conclusion, it is Thursday. And in the last 5 days, there's been massive volatility. The volatility that could have either taken your whole year away from you as a trader if you got scared out of it and you were too over leveraged last week and you didn't see the signals of the correction coming, or if you saw it coming and you were waiting for the range break, you could have made a ton of money short from Thursday into Monday, or if you got out of the way, which is what I tend to do, you know, or try and do, you know, you were thinking clearly for that Monday craziness where you could have bought in the hole and made a ton of money on Monday. I know a lot of traders that did real well, but I also know a lot that capitulated out. So, you know, it's a fine line there. And then, obviously, 2 days ago, you had that rally that failed in the last hour, and some guys, you know, got taken out and got out of all their, you know, stocks, you know, into that, and, you know, were upset. Or some guys even, you know, pressed shorts, 2 days ago, and then yesterday, who knows what they did. If they didn't cover, which they should have in that first hour when you saw them try and press the market, they might even still be short into this up move and rolling them up. So, you know, as much opportunity there was both ways, you know, there's a lot of, it all depends on which side of the trade you are. So with that said, you know, having the plan ahead of time, having a set of rules ingrained in your head and having a clear mind is how you could embrace the volatility. Hopefully we've helped you in the past week. I'm tired. You know, I guess every smart guy is on vacation because I've been on CNBC Asia, CNBC Regular, Bloomberg. Today I'm going to be on Fox Business. So I might be the only one, you know, in town because I keep getting these phone calls to talk about the volatility, which is where we tend to excel. You know, when there's movement and there's action and there are tactics to use. So hopefully you're excelling as well. And if not, you know, you might need to take a few different courses, which we also, you know, have here, whether it's a swing, an active trading course. You know, go to the front page. There's a lot of them, lots of tactics, and you do have a lot of resources in front of you. And I guess I'm a little long today because tomorrow I will be on the beach. There will be no morning call. So hopefully you see these levels, you have them in front of you, or you wrote them down, you have the list of go-to names. If we hold today, maybe that list will broaden because then they start going after the second and third tier names. But I think there's more than enough activity in the ETFs and the leaders versus looking for, you know, things to play catch up. Have a great day trading. I will be on the VTF. I will most likely do a recap, but then tomorrow it's going to start a long weekend. Have a good one.